Welcome to the big leagues, Class 11 students. You've officially stepped into the world of commerce, and this ISC Masterclass explainer is going to decode the ultimate language of corporate giants. Look, if you've ever stared at massive business empires like Tata and Reliance and wondered how they actually track, measure, and grow their monumental wealth, well, you're in the exact right place. We're going to build your foundational knowledge from the absolute ground up, tailored specifically for your 2026-27 ISC curriculum.
Okay, here's our highly structured blueprint for today's explainer. We're hitting 5 key areas: the language of business, the systematic accounting cycle, the core hierarchy matrix, the objectives of accounting, and finally, the specialized branches of accounting. Let's get right into it.
Section 1. The language of business. Because to truly understand those corporate empires, you've got to learn the exact financial grammar they speak. So, the classic definition states that accounting is the art of recording, classifying, and summarizing financial transactions in a significant manner and in terms of money. But what does that actually mean for us? Basically, it's not just doing math. It is the definitive, systematic method of tracking a company's financial heartbeat. If a business is alive and breathing, it breathes through these exact recorded transactions.
And this is where it gets really interesting, right? Because it's a discipline with a dual nature. It is both an art and a science. As an art, it takes deliberate practice, real knowledge, and practical application. Just like a painter refines their brushstrokes, you're going to refine your accounting skills through practice. But flip the coin, and it's a strict science. We're talking rigid rules, systematic principles, and absolute cause and effect relationships that produce perfectly accurate financial records.
Now, listen up, because there is a very strict boundary you need to memorize right now. The golden rule of this language is that transactions absolutely must possess a financial character. Keep in mind, we only record events that can be measured in actual currency. The money measurement concept is strictly enforced. So, say an incredibly skilled manager joins the company. That's amazing news, right? Sure, but since you cannot objectively measure that hire in exact rupees, it does not make the cut. It's not recorded in the books. Literally, only the measurable money matters here.
Moving right along to Section 2, the systematic accounting cycle. Let's see how this builds into a step-by-step machine.
Take a look at this perfect chronological path that financial data takes. It transforms all the way from raw input to finalized communication. Step 1, you start with the raw input data, your physical bills or vouchers. Step 2, you record those inputs chronologically into a journal. Then step 3, you classify them, taking all those similar transactions and dumping them into specific ledgers, like a cash account. Step 4 is summarizing all those ledgers into a trial balance and final accounts. Step 5, the fun part, interpreting the data. Do we actually make a profit or take a loss? And the final step is communicating that vital bottom line to the internal and external stakeholders who need it. It is a continuous, unbreakable loop.
Next up is Section 3, the core hierarchy matrix. We need to draw clear boundaries, separating the 3 major layers of this discipline.
We absolutely have to get these straight so you never mix these terms up. Think of bookkeeping as your foundational groundwork. It's literally just identifying, measuring, recording, and posting to ledgers. That's it. Now, exactly where bookkeeping ends, accounting begins. This is your analytical layer. It takes those recorded numbers and focuses on summarizing them, interpreting the results, and hunting down the exact why behind the profits or losses. And sitting at the very top is accountancy. That's the macro framework, the giant umbrella covering the entire systematic body of theory, principles, and rules that dictate how the whole shebang must be done. Which brings us to Section 4, Objectives of Accounting.
So we have to ask, why do modern firms obsessively maintain these systematic records? I mean, why put in all this rigorous effort? Well, beyond just discovering the final net profit, these strict records serve as a company's absolute best defense against internal fraud and errors. When every single rupee is tracked systematically, manipulation becomes incredibly difficult. Plus, it gives you permanent documentation that lets you monitor and compare performance year over year. It helps businesses pinpoint the exact reasons behind their financial outcomes and clearly weigh their total assets, what they own, against their liabilities, what they owe. It is quite literally the ultimate metric for monitoring growth.
All right, final stop, Section 5, the 5 branches of accounting. Because as businesses expand, one size definitely does not fit all.
As corporations blow up in complexity, their needs splinter. First up, and the most standard, is financial accounting. This is your bedrock. Every single major business relies heavily on financial accounting to map out their fundamental profit, loss, and year-end position. By compiling the comprehensive balance sheet, they're providing a totally clear, standardized snapshot of their overall financial health to the outside world.
But let's say you're a massive manufacturer churning out packets of Maggi or Parle G biscuits. Standard accounting just isn't going to cut it. You must use cost accounting. When you're producing millions of physical units, you have to ruthlessly track every single paisa of your production expenses. It computes the total production cost and, more importantly, the exact per unit cost. Think about it. If you don't know exactly what it costs to manufacture one single biscuit, there's absolutely no way you can set the correct selling price to guarantee a profit.
Then we have the third branch, which flips the focus entirely inward. Company directors rely almost exclusively on management accounting. This is all about providing internal corporate metrics strictly to the people running the business. It gives directors and managers the highly specific data they need for strategic decision-making, setting targets, and steering the entire future direction of the company.
Next is tax accounting, which is what keeps a business on the right side of the law. To stay compliant and operate in India, firms utilize tax accounting to perfectly calculate their corporate tax and GST obligations. The government demands extreme precision, guys, and this branch ensures that a company pays exactly what it owes. No more, no less. It's how they avoid severe legal penalties.
And finally, the modern corporate era demands social responsibility accounting. Businesses can't just extract wealth. They have an obligation to the society that supports them. This fascinating branch actually measures and records a corporation's welfare contributions back to society. We're talking about building parks, adopting schools, or funding massive crisis relief efforts, just like the incredible COVID support infrastructure we saw from giants like Tata and Reliance. It tracks their true, measurable impact on human welfare. So, as we wrap up this masterclass explainer, I really want you to look at the business landscape differently. You now possess the structural blueprint of accountancy. You know the exact cycle, the hierarchy, and the branches. The corporate world isn't some big mystery anymore. It's literally just a language waiting to be read. So how will you apply this language of business to decode the corporate world in your upcoming ISC academic journey? Keep that question front and center as you step into your studies. Thanks for joining me, and stay intensely focused as you master the ultimate language of business.